You're watching Ask Udayan, our special show where we answer all your questions on stocks. With the markets currently as volatile as they have been, who better than our global business editor to take you through some clear strategy and level-headed thinking when it comes to markets at a time like this. If you have a question, do send it to us on the number on your screen. We'll answer a select few every week. Our first query today from Sanjay Agarwal in Gurugram. He is holding Happiest Minds. Let's listen into his query.
Hi Udayan, I'm Sanjay Agarwal from Gurgaon. I'm holding 50 shares of Happiest Minds at the rate of rupees 1144 per share. I seek to know from you whether I should simply hold them as it is, sell them now, or add more at current prices with the aim to average my holdings. I look forward to have your mid to long-term perspective. Thanks.
Well, Happiest Minds is a good company with an excellent promoter and a very good management team. The problem was that it had become too expensive. I mean, you will recall, you didn't buy at the top, but the stock was trading at 1,500 and 1,600 rupees. So the correction that we've seen in Happiest Minds all the way down to 850, 900 levels, from those levels, it's a significant correction, is part correcting with the sector, because the whole IT space has corrected quite significantly because of all the problems of what is going on in the Western world. People have great concerns about whether the kind of demand that we see for IT services will continue, and particularly for companies like Happiest Minds, which cater to the digital segment. There's been a collapse in valuations in the digital segment because of the Nasdaq fall, and therefore there has been a sentimental impact on Happiest Minds as well. So I think part of it is because of all those issues, and part of it is the very lofty valuations that the company was trading at 55, 60 times, and that had to correct in line with the fear of interest rates going up and the general compression in valuations in the market. Even now, Happiest Minds, after such a big correction, is trading at 35, 36 PE multiple on FY24, which is not the cheapest valuation. And the last quarter's numbers were not bad, but they were, by the standards of Happiest Minds, maybe a little lackluster. But I think it's a company which can still give you about 20% revenue growth and 25% profit growth over the next 2-3 years, if not longer. So growth is there. It's whether the stock bottoms out at a PE multiple of 30 or around these levels, which is a difficult judgment call to take. So I think this stock will need to consolidate for some time longer. I don't know whether this is the right time to average. Maybe you'll find even better price points going ahead. But keep valuations in mind. Otherwise, I think it's a very good company to own in the medium term.